Welcome back to my final morning report. Charles Perez on Thursday, the 17th of March, with me, Rich Perry, market analyst at Handset Markets. Let's look at this gold chart now. We've seen a big, strong upside move on gold, didn't we, yesterday on the back of that Fed meeting? About 30 odd bucks added to the price yesterday, and it's sort of continued today, not strongly. It has continued though. I'm I'm going to talk about it again. We've still got these bearish divergences on these momentum indicators, although you have seen that the stochastics turn higher to reflect this move. You've also got this uptrend in place here that got broken, so that becomes a basis of resistance, so I'd be a little bit cautious with that as well. But you have broken back above 1264, which was the rebound high from the Fed move, because you then saw a consolidation, and then as the Europeans have come in, they've bought it and added to that strength. So you're above that 1260 spot 60 pivot line, and that sort of dates back to that old high, old breakout level. Sort of poor. It wasn't great, not entirely accurate, but still I think had a part to play. Sort of seemed to still act as resistance, breaking through that. So you're sort of more positive now. Are you going to be sort of seeing a test of the highs? It is possible. I think with this dollar weakness that we've got at the moment, we could see a run up back towards the highs again. Is it going to be a strong breakout? I'm still not sure, because I think that you've got these bear momentum divergences which are holding back what would be a strong rally, I think. So what we are doing, I think, on gold, or what I would be doing, is being very cautious again, because we've had this strong run higher in the wake of the Fed. It has sort of again looked to break out, and you may see a drift higher. You've got next resistance around sort of 1269, which is a minor pivot level from a few days ago. But then sort of you're looking at the 1282.50, which was that reaction high that we saw on the 11th, which was Friday. But in terms of the gold run higher, I'd still be a little bit cautious because of these momentum indicators. But obviously the dollar is weak at the moment, and I think you're going to have to go with that for the near term, but just be very cautious, I think, because I'm not enormously convinced that I think we're going to see gold sort of bursting higher from here. I might be wrong, but I'm still sort of a little bit cautious of these momentum indicators until they start to sort of demonstrably improve again. I mean, that would involve the RSI going above 70, I think, breaking that reaction high there, and also sort of seeing the MACD lines crossing higher nicely, and seeing the stochastics also higher. So until you see that, I'd be still very cautious about how this one's playing out. But for now, you're sort of backing the bulls again because of the dollar on the back of the Fed. But as I said, be cautious, I would be. Anyway, I wish you good luck in your trading, and I'll speak to you again tomorrow. Thank you.